Government remains shut down for now a full week, and the market just largely has been shrugging it off. But that hasn't stopped gold. Gold hit a big new number today, 4,000. We'll talk about that in today's preview, talk about why that matters, the move that it's been on right now. We'll take a look at the rotation, to today's sector rotation, as well as a couple of breadth signs that are showing up as some red flags. And that's what we'll cover in tonight's Market Outlook preview. So let's go ahead and get started. Today is Tuesday, October 7th, 2025. This is the Market Outlook from MarketScholars.com. My name is David Settle. A reminder, if you want access to all of our Market Outlook blog posts, you can see here under our Market Outlook video archives, this is what they look like. A lot of information here about what happened today and why it matters and what to expect the next day. So if you want access to that, just click on this link right here. That will take you to today's Market Outlook blog post. If you're not logged in, you'll get this page. So if you're a subscriber, just click on login here down at the bottom and it will log you in and just take you right straight to that blog post. Otherwise, if you're not a subscriber, click on this link right here. That will subscribe you for a free basic account that gets you access to all of our blog posts. This link right here takes you to the same spot. It takes you to this page. The basic subscribe to our basic tier. Again, you can subscribe for free and you get access to this every day, including this Market Outlook preview video that you're watching, probably either on YouTube or on Twitter or any of the social media networks that we share. All right, let's take a look now at what we got going on here. As you can see, it was a decline today, and it wasn't nearly as bad as it could have been. But there are some cracks showing up underneath the surface. One of those cracks is the trend indicator really popping up to the upside today. And when you look at the number of stocks above the 50-day moving average, they dropped down back below its average. You can see the average has been falling for quite a while. I mean, huge divergence here. When you see like how bullish we've been for as long as we have been, and we've been diverging on the number of stocks above the 50, looking at the 20-day average. Again, we kind of saw that a little bit over here in 2021. But not nearly to like this degree. And we saw it a little bit here as well in 2024. And we had this divergence going into that pullback. But this is kind of the longest extended divergence here between, again, the number of stocks above the 50-day moving average, as well as the S&P 500 itself. You can see the correlation down here at the bottom between the two is over the last 4 weeks is close to being negative. If I look at the last 3 months, which is pretty much, I guess it hasn't been 3 months, but it's been a few months here, it is a negative correlation. You can see it's normally very positive, and there's been times where we've been negative going into this pullback and correction, and of course in early 2024 going into that pullback. So, and we saw in 2021, as I showed you earlier, going into this pullback and then subsequent correction. So it's not the most bullish sign to have such a negative correlation. And then one of the other things too that's standing out, the number of stocks above the advanced decline line here. If you take a look at that, it is negative. It's pretty sharply negative, but let me zoom in on just this last year. And you can see the 20-day average has gone negative again. Now, it did briefly over here on August the 1st, and we avoided a decline. That was kind of like what could have been an intermediate decline, but we bounced right off of it. So we were able to be just fine. But usually when we go negative, it's because we're going into intermediate decline. So a little bit of a red flag on that as well. The other red flag, the other thing that's kind of standing out, at least with today's move, now it was a down day, so it's not a total shocker here. But you can see that all your safety trades were the big winners. Now, keep in mind that since we've come off this intermediate or near-term low, healthcare and utilities have been the big winners, right? And staples is outpacing discretionary. That's not, and that's because of today. That's not the pattern we want to see. And again, to see such a dramatic move higher in gold and this parabolic move that we've been getting, it's ADX now almost at 50. Again, weakness in gold would most likely coincide with strength in the dollar. Now, again, we're not weak at all right now. We just barely got a cluster, and the trend's about as strong as it's been, right? We've been higher a few times on this in the green, but it's very, very strong. In all these instances, when we've had such a big move, we end up with a pretty bearish move or a bearish trend. As you can see, bearish trends on a lot of these, but at least a bearish move when we've been this bullish. And again, a bearish move on gold typically means a bullish move on the dollar, which, as you saw today, can put pressure on U.S. equities. So I go into a lot more detail about some other red flags that are showing up, right? That suggests we're getting closer to that intermediate decline. Again, just 5% pullback, nothing major, but we're getting closer. So I break that down. We'd like to look at some of those intermarket relationships. And our trade idea is actually in the discretionary space on the stock itself that's been unable to really get going. And it's not Tesla, right? But it's been in an area that's been struggling. We talked about how to trade it with a new breakdown to the downside today. So that is our market outlook preview. So that does it for today. Again, if you want the full-length version of the Market Outlook video, click on that link. That takes you to our Market Outlook Foundation page. You can subscribe there monthly. No commitment. You can cancel at any time. It's just $29 a month, or roughly $1.40 a video. You get access to the full video every single day of the week, which includes the trade idea that we do every video. You also get access to our Market Outlook live stream. It's a live stream that we do at 3:30 Eastern time. We put on the trades in real time before the market closes. We manage all the existing Market Outlook trades, decide whether we should stay in them or get out of them. We talk about why. And you also get access to our Market Outlook Live Trade Tracker, where we track the results of all of our trades. We're having a really good October expiration cycle right now. But we track all the results of all those trades in that trade tracker. Again, all for just $29 a month. Or you can get 2 months for free if you do the yearly plan at $299 a year. Again, thank you for watching. Subscribe to our YouTube channel. Hit that thumbs up icon on today's video. Share, comment, and share today's video with anybody else. Follow me on Twitter at DavidSettle42 for more content between the videos. You can also follow me on LinkedIn, Facebook as well. Have a great rest of your Tuesday night, everybody, and we'll see you all tomorrow.